Welcome to 1 Minute Crypto. I'm your host Chronos, and today we're going to talk about how to make money by taking advantage of the difference between prices on various Bitcoin exchanges. When I first noticed this technique a couple years ago, I thought I'd invented it myself, but it turns out it's a very common practice in the trading world called arbitrage. Before we get into it, though, I want to thank our sponsor because this episode is proudly sponsored by America's Card Room, an online poker site where you can deposit and withdraw with over 60 different cryptocurrencies. Use the bonus code Chronos and you'll get up to $50 in free cash. The way that works is after you create your account with them, they give you a couple dollars for every day that you log in during the first 20 days. If you hit all 20 days, you get the full $50. All right, so behind me here, I have a list of various Bitcoin exchanges with their current prices. You can find this list at coinmarketcap.com by clicking on the price of Bitcoin on the front page. Let's take a look around. The first thing you want to focus on is the currency pair that the exchange is trading, and that's going to be under the pair column here. The first one, Bitfinex, is trading Bitcoin against US dollars. That's important because if it's trading against a foreign fiat currency, then it can be very difficult to get your money in and out of the exchange. For example, down here we have Bithumb trading Bitcoin against the Korean won. Now that's a very appealing exchange for arbitrage because you can see the price is much higher than the price at the other exchanges. But it's unlikely that you're going to be able to send Korean won to them or take withdrawals in Korean won. So if you're just getting started in arbitrage, I would not recommend working with fiat currencies that are not your native currency. The best pairs to look for are your native currency and other cryptocurrencies. So let's say you're from the United States and US dollar is your native currency. In that case, Bitfinex, which trades Bitcoin against US dollars, and GDAX, which trades Bitcoin against US dollars, and Bitstamp, and a little bit further down we have Gemini. These are great opportunities for arbitrage because you can send Bitcoin in or send dollars in, and you can withdraw Bitcoin and dollars. That means that you have an easy flow of money in and out of the exchanges, which is key for arbitrage. So once you have money on the exchanges, the act of arbitrage is very simple. You simply have to keep an eye on the prices at the two exchanges. And when one exchange gets more expensive than the other, you sell your Bitcoin at that exchange and buy it back at the other exchange. In order to minimize your risk, you'll want to make those trades as quickly as possible so that you don't spend time with more or less Bitcoin than you intended. After the trade is done, you've instantly made some money. But one thing to keep in mind are the exchange fees. You want to make sure that you're making enough money in the difference between those prices to pay for any fees that the exchange will charge. That's the basic concept of arbitrage. And if you haven't done it before, I recommend doing a lot of research and doing it very carefully. Because when you have your money on an exchange, it's at risk. If that exchange goes down suddenly or gets hacked, you could lose your money. So tread with caution and be careful, but there are opportunities for arbitrage out there in the ecosystem, especially when the markets get volatile. If you have any questions, feel free to post in the comments below the video. Thanks for watching.